Hello and welcome. My name is Ed Newton with Newton Wealth Management. We put these podcasts together to help you as you continue along the path to achieve and maintain a worry-free retirement. We hope you'll enjoy this one and find it beneficial. I'm recording this on Tuesday, September 22nd. We got some data this morning that I wanted to share with you. I don't usually do podcasts for each data point that we watch, but I felt this one was warranted in sending out to you. Existing home sales increased 2.4% in August to a 6 million unit annual rate, which matches the consensus expectations. Sales are up 10.5% versus a year ago. Sales in August rose in all major regions. The gain was due to both single-family homes and condos and co-ops. The median price of an existing home rose to $310,600 in August. This is not a seasonally adjusted number and is up 11.4% versus a year ago. Average prices are up 8.8% versus last year. So what are the implications of this data and what does it mean for our investments? Existing home sales continued to impress in August, rising for a third consecutive month and hitting an annualized pace of 6 million units for the first time since 2006. From February, which was just prior to the pandemic, to the bottom in May, sales collapsed 32.1% as lockdown measures and widespread economic uncertainty took hold across the country. Remarkably, since then, sales have made a full V-shaped recovery and are now up 4.2% from the previous February high. It's important to remember that existing home sales are counted at closing, so August gain mostly reflects contracts that were signed in June and July. This was smack dab in the middle of the second wave of coronavirus cases erupting across the country, signaling the resilience of the ongoing housing market recovery. One major contributor to the recent recovery has been the Fed's liquidity policies, which have pushed 30-year fixed mortgage rates to record lows, boosting affordability. In fact, demand for existing homes has remained so strong that 69% of homes sold in August were on the market for less than a month. That said, sales face a continued headwind from the low inventory of existing homes. Today's report showed that inventories were lower than any other August on record and down 18.6% versus a year ago, the best measure we have for inventories given the seasonality of the data. This inventory shortage is especially acute on homes in the lower end of the price spectrum, with sales of properties worth $250,000 or less actually down from a year ago as sellers mark up sale prices to respond to surging demand. Meanwhile, sales of properties worth $1 million and more are up over 44% in the past year, as wealthy urban dwellers purchase properties elsewhere to escape the pandemic-related restrictions. This shift in the mix of homes sold has put considerable upward pressure on median prices, which are now up 11.4% in the past year versus a year ago comparison of 6.7% in January. However, with employment growing, new and future construction boosting inventories, and an easy Fed, which will keep short-term rates near zero well into the future, expect sales to continue at a robust pace in the months ahead. Finally, on the manufacturing front this morning, the Richmond Fed Index rose to plus 21 in September from plus 18 in August. This is the highest reading for the index since 2018 and continues to show a healthy rebound in manufacturing activity versus the deeply negative readings early on in the pandemic. We hope this information has been useful to you. Our goal at Newton Wealth Management is to help clients achieve and maintain a worry-free retirement. We are a fee-only firm. That means we don't receive commissions or any other compensation from the investments that we utilize. We have a fiduciary responsibility to our clients, which means that we always put your interests first. If you haven't set a plan or not sure that your plan is appropriate for your goals, we would be happy to talk with you and see if there's anything we can do in order to get you on track so that you too can achieve and maintain a worry-free retirement. If you have $250,000 or more of investable assets, I would invite you to visit our website at www.NewtonWealthManagement.com. There you can find out more about our firm and the services we offer. Again, the website is www.NewtonWealthManagement.com. From the website, you can also contact us to request a no-obligation, no-fee consultation. We look forward to hearing from you at www.NewtonWealthManagement.com. Newton Wealth Management is responsible for the content of this podcast and reflects the current opinion of the speakers. It is based upon sources and data believed to be accurate and reliable. Opinions and forward-looking statements expressed are subject to change without notice. Securities offered through Archer Investment Corporation. This information does not constitute a solicitation or an offer to buy or sell any security. A risk of loss is involved with investments in stock markets. The commentary provided should not be regarded as personal investment advice. Past performance is no guarantee of future results. You should carefully consider investment actions in light of your goals, objectives, cash flow needs, and time horizon.